Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for December the 1st, 2010. Now our first position is going to be in light sweet crude oil. We're going to be looking actually to short this. What I want to point out here is that I have talked about this in the Forex weekly outlook on several occasions over the last few weeks. We have a base at the 80 level. However, we can see that we're starting to see a bit of a base form just under this 86 level. So we've closed at 84.11. I don't think crude oil is going to move up any further from here. I believe it's going to succumb to the US dollar strength, and crude oil is likely to break back below $80 a barrel in the weeks ahead. So with that said, let's look at some of our key levels: 83.78, 83.89, and 84.46. We've closed at 84.11. Now again, we can see that our predicted moving averages are beginning to stack up on top of each other. We've closed at 84.11. However, the 3-day predicted moving average is actually above this level. So looking at our other indicators here, our predicted medium-term differences have turned positive. However, the predicted long-term differences are getting hung up on the zero line. I'm not sure that they're going to be able to continue to move any higher from here. Our predicted MACD is running flat along the trigger, as is the predicted true strength indicator from Vantage Point, both just above the zero line. In my view, this is a warning indication here that crude is getting ready for a bigger move to the downside. So we can see that I have this on the continuous contracts, whether you're in the cash markets or you're on a futures contract a couple of months out. We're looking to sell this thing, and where we're going to sell it here, I'm going to bring this in, and I think I'm looking right now, I would think 84.40, between 84.46 and 85.46 is likely to contain the top side here from this point forward. So we have 85.82 and 83.26 as the low. Neural index on the crude contract still pointing up, but again, the neural index is a 24-hour indicator, and by the look of a number of things that are happening in the market, I question whether crude is going to be able to break through this 85-82 level. So for tomorrow, for shorts, we're going somewhat counter trend here, but we're going to be looking at setting shorts in the 85.50 area. Our stops here are going to be above the highest point that we have to date. So we're going to bring our chart back up here. Again, 85.50 is what we're looking at, and our stops here should be again above this 88 level. I think it's going to be incredibly lucky if this thing gets above even $87 a barrel in this particular environment. So again, we're putting the stops up in that level just to stay out of that broker radar, and we would be looking for a break of this support line at this $80 a barrel. So for your short-term traders, you're going to set your shorts at 85.50. You would want to get out on a day trade around the 83.20 level. But your medium and longer term traders, this could be a very good selling opportunity, and you would look for a break down below this 80 level, potentially back into the $72 to $74 a barrel in the next 2 to 3 weeks. So that's our first position. Now our second position is going to be very highly correlated to this one, and that would be, of course, the US-Canadian pair. Now the US-Canadian pair can also be a very good leading indicator for what's happening with those crude oil contracts. Now we're in two completely different markets, one being the currency markets, one being the commodity market, but again, there's a very, very high correlation here. Now you can see this trend line that I've drawn right across here using the Vantage Point software that comes in around this 102.50 level. We can see this one candlestick has broken above this level, and this hasn't happened since the middle of October. So what I'm seeing here is that the market has broken through that line, and we're likely to have a very shallow pullback here tonight. But I want to point out first the key levels: 101.61, 101.84, and 102.19. Because this is a fresh triple EMA cross, you can see that all three of the predicted moving averages are moving up, and most importantly, the 3-day and the 8-day predicted moving average are moving off of that 18-day predicted moving average. We have the short, medium, and long-term predicted differences all pointing higher, the predicted MACD pointing higher, and the predicted true strength indicator also pointing higher. There is no crossover here, and they're both getting ready to move above that zero line. So we're going to look at the predicted low for tomorrow, but what I want to point out here is this 102.19 area, 102.25. That's where we're looking to get into this thing for a short position. Stops will be below the 101.50 area. 101.61 is the 18-day predicted moving average. We want our stops below there. So now that we've done a considerable amount of analysis by looking at this chart and the indicators that I have up on here. Now we're going to go into that daily report and see if that daily report coincides with those predicted moving averages. So we can see here that it does. The 102.13 is the predicted low, 103.14 is the high. So we're not going to use that. We're using the predicted low as a base in conjunction with those predicted moving averages. Now again, looking at those crude oil contracts and the fact that crude seems to be forming a top around that 86 level, this bodes well for longs on US Canada short term, short to medium term. So we're going to be using again the 102.19 to 102.25, somewhere in that area. And the reason again I want to point out why I'm picking that particular area and not the vantage point predicted low of the day. We have the 3-day predicted moving average at 102.19. When we have a fresh trend like this, and a very strong one I might add potentially, because we can see how long we've been running flat here, and finally these predicted moving averages from vantage point are breaking higher, giving us that buy signal. So that's why I suggest the pullback will be very shallow tonight, and the 102.19 to 102.25 area is where we want to look to get into those longs. So those are the market positions for December the 1st, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.